everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. The spot price of steel in China remained weak this week, with major domestic varieties falling in tandem. Hot rolled coil, HRC, spot prices dropped by 10 yuan ton week on week, with the average price of 4.75mm hot rolled coil in 24 major domestic markets reaching 3,297 yuan ton. Rebar spot prices continued their downward trend, declining by 30 yuan ton week on week. Weekend user procurement and inventory accumulation formed a dual suppression, coupled with the exit of speculative capital. Prices fluctuated downward before stabilizing slightly, with overall volatility confined to a narrow range. The macroeconomic environment presents a dual characteristic of support plus disturbance. Domestically, the central bank's reverse repurchase operations maintained reasonably ample liquidity, the issuance pace of local infrastructure special bonds accelerated, and the policy of expanding steel demand in high-end manufacturing under the Steel Industry Steady Growth Work Plan 2025-2026 was implemented, providing basic support for the market. Overseas, the Federal Reserve's latest monetary policy meeting signaled maintaining interest rate stability, easing panic in the global commodity markets. However, international steel trade frictions continued to escalate, and coupled with a slight month-on-month decrease of 0.2 percentage points in the global manufacturing PMI in January 2026, overseas demand recovery remains sluggish. The outlook for steel exports is under pressure, dampening market sentiment. In addition, speculative capital adjusted their positions in commodities, with the open interest of the main steel futures contracts decreasing by 52,000 lots week on week, indicating a weakened capital allocation intensity. The industrial sector witnessed a game between supply contraction and weak demand. According to the latest statistics from MySteel on February 5th, the total supply of 5 major steel varieties this week reached 8.4226 million tons, a slight decrease of 17,800 tons week on week, showing a moderate contraction in supply. The core reason lies in the divergence in steel mill profitability. The current profit margin of long-process steel mills is 58.87%, while short-process electric arc furnace mills remain in a state of loss. The off-peak power profit of EAF mills in East China is 61 yuan ton, leading to differentiated production rhythms. By product, rebar output reversed its upward trend to decline, with weekly output at 1.9168 million tons, a decrease of 81,500 tons week on week, 4.08%, mainly due to production cuts by some loss-making short-process mills in North China. HRC output increased against the trend, reaching 3.26649 million tons this week, an increase of 13,500 tons week on week, supported by orders from high-end manufacturing, which boosted the production willingness of long-process mills. Pig iron output remained at a high level, averaging 2.4102 million tons per day, and the blast furnace iron-making capacity utilization rate stood at 90.35%. Long-process steel mills maintained strong production intentions before the Spring Festival, resulting in a limited overall contraction in supply. Seasonal weakness was prominent on the demand side. Construction steel demand declined sharply, with rebar apparent consumption at 1.4764 million tons, a significant decrease of 287,600 tons week on week. Persistent frozen soil in the north and low-temperature rain and snow weather in the south restricted outdoor construction. The operating rate of construction machinery dropped by 2.1 percentage points week on week, and the implementation pace of infrastructure projects fell short of expectations. Manufacturing steel demand remained stable. HRC apparent consumption was 3.2182 million tons, a mere decrease of 43,400 tons week on week. Demand from high-end manufacturing, such as new energy vehicles and high-end equipment, provided sustained support, but overall downstream procurement was dominated by on-demand restocking, lacking speculative demand drivers. The export sector is under obvious pressure. Affected by adjustments in overseas trade policies and sluggish global demand, the scheduled steel export volume decreased by 3.5% week-on-week, and the supplementary role of external demand on the demand side weakened. The total inventory of the 5 major steel varieties shifted from a decline to an increase this week, with inventory accumulation pressure officially emerging. According to MySteel's monitoring, the total inventory of the 5 major steel varieties reached 18.7912 million tons, an increase of 149,800 tons week-on-week, marking the full start of the pre-spring festival inventory accumulation cycle. By product, rebar inventory continued to accumulate, with social inventory at 3.6592 million tons and mill inventory at 1.5365 million tons, totaling 5.1957 million tons, increasing for 5 consecutive weeks. Weak end-user demand hindered destocking. HRC inventory rose slightly, with total inventory at 3.7799 million tons, mainly due to increased production and the on-demand procurement rhythm of the manufacturing sector. The inventory pressure rose moderately but was significantly lower than that of rebar. For raw material inventory, iron ore port inventory stood at 168.3494 million tons, and steel mills remained cautious in restocking. Raw material prices fluctuated at a high level, providing limited cost support for steel prices. Overall, the current market is in a game pattern of policy support plus cost support versus weak demand plus inventory suppression. Short-term domestic steady growth policies are unlikely to quickly transmit to end-user demand, and the irreversible seasonal decline in construction steel demand before the Spring Festival will continue to suppress prices. However, the price support willingness of long-process steel mills and the relatively sound fundamentals of HRC will limit the downside space. In addition, short-term fluctuations in overseas market sentiment and raw material prices will bring disturbances, but they are unlikely to change the core supply-demand balance. Therefore, steel prices are expected to fluctuate within a narrow range next week. Rebar may experience greater volatility due to inventory pressure, while HRC will remain relatively stable. The market will lack momentum for a trending rise or fall, with an expected volatility range of 30-50 yuan ton. Operationally, it is advisable to maintain a prudent and flexible approach, avoiding one-sided bets. For rebar, given the inventory accumulation pressure, blind restocking is not recommended. It is suggested to only maintain the minimum safety inventory and wait for phased restocking opportunities when prices pull back below 3,250 yuan ton. For HRC, on-demand procurement can be continued, with a focus on order demand in regions concentrated with high-end manufacturing, avoiding excessive stockpiling. For billets, supported by high pig iron output, price volatility will be relatively stable, allowing for small-scale allocation, with core attention on pre-spring festival inventory accumulation trends. Meanwhile, close monitoring should be paid to key variables such as the implementation progress of domestic infrastructure projects, changes in overseas trade policies, and fluctuations in raw material prices. From the institutional perspective, the easing of constraints under the 3 red lines has improved expectations in the real estate market, with the overall macro environment turning warmer. On the industrial front, steel mills' winter stockpiling is drawing to a close, and the high inventory of iron ore is suppressing futures prices. Both supply and demand for steel remain weak. While inventory levels are relatively healthy ahead of the Spring Festival, the expected post-holiday decline in costs may drag steel prices down slightly. In summary, steel prices will be dominated by supportive factors before the Spring Festival, showing an overall oscillating trend. Among the procurement varieties, rebar and billets will perform relatively stronger. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.